Imagine waking up to find that 2/3 of all the XRP has vanished from the open market, not because of a hack or a glitch, but because Wall Street scooped it up while nobody was paying attention. It sounds a bit like a crypto thriller, right? Well, I stumbled on some numbers suggesting that this might not be so far-fetched, and I've got a story to tell you. So, there I was, scrolling through the latest crypto news, as one does on a Tuesday night, when I come across an analysis from an XRP community researcher. This is Chad. Now this guy, he ran the math on the new XRP spot ETFs that have been popping up, and his model absolutely stunned me. Now according to his projections, the first wave of just 7 XRP ETFs could collectively accumulate about 22.4 billion XRP within a year. That's over 1/3 of all the entire circulating supply. 1/3 of all XRP, quietly taken off of the market by a handful of funds. Now, he didn't stop there. He modeled a phase 2 with more ETFs in the mix, and the total accumulation jumped to nearly 40 billion XRP. That's roughly 2/3 of all of the XRP in circulation, potentially being held by these funds. In fact, one report even suggested that if about a dozen XRP ETF kind of launches, well, they could absorb nearly all 60 billion XRP that's in the public hands within a single year. That's nearly the entire supply gone into institutional vaults. Now, I had to read that twice. My first reaction was that this can't be real. They must be assuming some outrageous scenario. So I dug deeper to understand how on earth this could actually happen without sending XRP's price to the moon on day one. Well, here is the catch. These funds aren't placing huge buy orders on regular exchanges that would pump the price overnight. Most of their accumulation actually happens off exchanges, over the counter OTC, or in structured daily allotments. Now they're not basically siphoning XRP off quietly on, delayed settlement cycles, so the usual supply and demand fireworks are muted at first. In fact, since the first US XRP ETF launched, XRP's price hasn't skyrocketed at all. It's actually been pretty muted. As of right now, XRP is actually about 40% down from its July highs of $3.66. That's, despite multiple ETFs kicking off. But analysts say that this lack of immediate price action is no reason to panic. One market strategist pointed out that there's nothing wrong with XRP's fundamentals. Instead, we're in a phase where the macro factors and slow institutional flows are driving the price more into retail hype, or at least driving the price more than retail hype alone. So in other words, just because we have ETFs now does not mean that we get an instant moonshot. At least not yet, anyway. I mean, just have a think about when the Bitcoin ETFs actually launched. There was a 21% drop in Bitcoin's price the day that the actual ETFs launched. Talk about a sell the news event. The same for Ethereum, Solana, HBAR, all of them have reacted the same way, which means there's nothing unusual about how the price is reacting for XRP. In fact, it's the same old playbook on repeat. Actually, a very well-known commentator who goes by the name of 𝗗𝗶𝘀𝗰𝗱 actually posted a great reality check on X. He basically said, I know that everyone is excited and hoping for $10 or even the mythical $589 XRP tomorrow, just because of these ETFs. But let's temper these expectations and stay calm. And he's right, because only one XRP ETF launched initially, the Canary Fund's XRP-C ETF, with the others all lined up in the coming weeks. Right? We're all watching and waiting for the first fund, a bit like a hawk, to see how the inflows actually affect the order books, right? But 𝗗𝗂 suggests that the real fun actually begins once we see consistent inflows, how the price action and order books get eaten up as the ETF grows. So far, the Canary XRP ETF's debut was pretty impressive. It was about $58 million in day one volume, and the biggest ETF launch of 2025. But it didn't explode the price. Why? Likely because a lot of that was actually set up through authorized participants and OTC trades that don't immediately spike the public markets. Now, here is where it gets even more interesting, right? The bullish side, right? Because, Chad's model assumes current prices stay roughly the same during this accumulation phase. Now, let's just think about that for a second, because if XRP's price stays low, let's say somewhere between that kind of high $1 range and the low $2 range, well, these funds can keep gobbling up millions of tokens on the cheap, right? And if XRP's price were to rise dramatically, well, they wouldn't be able to get nearly as many coins for the same budget. For instance, with $1 billion, an ETF could buy 1 billion XRP if they were $1 each, right? Or $500 million if they were $2 each. But only 10 million XRP if they're $100 each. So, ironically, the longer that the price stays cheap, well, the more XRP that they can accumulate before the supply dries up. And that sets up a very wild scenario. Either the price per XRP shoots up, slowing down their buying, but massively boosting the value of what's already been purchased, or the price stays low and they keep sucking up the tokens until the well is nearly dry. Both scenarios eventually spell bullish outcomes for long-term XRP holders. It's basically a win-win situation in theory, right? Either we get a price explosion sooner or a supply shock later. Possibly even both at some point too, sequentially, right? Now, as Chad noted here, the only thing that prevents a total supply drain is a dramatic price increase, and either outcome would be ultra bullish for those of us that are holding XRP. Now, before I go on, let me drop a critical reminder here, because this is the part of the video where you might start thinking it's time to bet the farm on XRP. But no, because this might just shock you. But I'm not a financial advisor, and nothing in this video is financial advice. Cryptocurrencies, they are highly volatile, and you could lose all of the money that you invest. You should always do your own research and consult a qualified professional. After all, your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and this video is for entertainment and educational purposes only. Alright, so with all that said, let's talk about what's happening beyond just ETFs. Just because, the XRP accumulation story isn't only about those funds, right? There is a bigger picture of institutions and major players quietly loading up on XRP. This broader trend actually gives us some pretty important context. For example, let's take SBI Holdings over in Japan. This is a pretty huge financial conglomerate, and they've been all in on Ripple and XRP for many years. Public reports estimate SBI's exposure to XRP to be about 1.6 trillion. Yeah, that's roughly $10 billion worth of XRP. So, 1.6 trillion. Now, at times, they hold so much XRP that its value has exceeded SBI's own market cap. Just let that sink in, right? A major financial company's stake in XRP is so large that it's worth more than the company in itself. And SBI is not alone. In the US, we saw, a consortium of big players like Citadel Securities and Fortress recently pour $500 million into Ripple, the company, valuing it at a whopping $40 billion. Now, that deal closed just after Ripple's Big Swell 2025 conference. So when you have Wall Street titans betting hundreds of millions of dollars on Ripple's success, you can have to think about how bullish they might be on XRP's role within the global financial plumbing, right? Now, these people, they don't just throw money around for the fun of it. They actually do that when they see an opportunity. Now, consider the crypto asset managers then. One named WisdomTree, you might know them from the mainstream ETFs, they launched a physically backed XRP ETP in Europe. It's listed on exchanges and, there's a lot of talk about it. Now, what's physically backed about it and what does that mean? Well, it means that they actually hold real XRP in custody for every share of the ETP that investors buy, just like the US ETFs, right? It's not just paper here. So, WisdomTree has been steadily buying and storing XRP for their clients since they launched that particular product. It's attracted plenty of inflows because big investors who want XRP exposure but don't want the hassle of wallets and keys can just buy the ETP. And WisdomTree is not alone either. 21 Shares, CoinShares, and others in Europe have very similar products either live or in the pipeline. All of them have to acquire and hold XRP to back those shares. Meanwhile, of course, major exchanges around the world are themselves significant XRP holders, usually on behalf of their customers, but it still impacts the circulating supply. So check this out, right? 𝗗𝗶𝘀𝗰𝗍, a South Korean exchange, reportedly holds between 5 and 6 billion XRP in its wallets for their users. Now, that alone is nearly 10% of the supply. Binance, the world's largest crypto exchange, has at least 1.4 billion XRP in its addresses that are known to be Binance linked. And Uphold, a US-based platform, shows over 1.5 billion XRP in custody. Now, in theory, these exchange-held XRPs are still circulating because, well, users could withdraw them or trade them. But in practice, a lot of that just sits idle as long-term holdings by users or as liquidity for market making. Now, it's kind of concentrated in a few rather big pools rather than spread out. Now, analysts note that when so much of the supply is pooled in just a few places, it can affect the liquidity and price swings. For example, if one exchange's wallets move a huge chunk, the market notices. More importantly, it means that a large portion of XRP isn't out freely floating around. It's actually sitting in institutional or custodial accounts. So, as an XRP holder, I see both the blessing and the curse here. It can dampen volatility in the short term, but it can also mean that there's fewer coins that are truly in circulation that might otherwise be on the order books. Now, let me give you perhaps the most kind of startling example of accumulation then. Ripple itself. You'd think Ripple, the company that originally received 55 billion XRP into escrow many years ago, wouldn't even need to buy XRP, right? Well, they just actually take some out of their escrow if they need it. That's what you'd think. Well, you would be wrong, because recently Ripple actually went ahead and accumulated on the open market and bought back 1 billion XRP for their own use. Yes, they bought with cash, just like you or I would. Now, why would they do that when they still have billions locked up in escrow? It's because those escrowed XRP are actually tied up in contracts and scheduled releases. Ripple can't just dump the escrow coins arbitrarily, right? Well, much of it is actually committed to partners or long-term initiatives. So when Ripple needed more liquid XRP for use immediately, well, their only option was to go ahead and buy it on the secondary market. So they did. I mean, think about that as a signal and what kind of signal that sends, right? The stewards of XRP's ecosystem felt that it was better to buy from the market now than to wait for more escrow to unlock, right? Now, they saw value at the current prices, and in doing so, they tightened supply just a bit more. Now, as one analyst quipped here, XRP's real circulating liquidity is, well, getting tighter, and even Ripple had to scramble to get more. Alright, so let's sum all of this up then. ETFs and ETPs are stockpiling XRP for investors. Big institutions like SBI and others are sitting on mountains of XRP, right? Exchanges, they hold a huge chunk for their users, and Ripple is buying from the market too. That is a multi-front accumulation. So it's no wonder that you hear the term supply shock thrown around in the XRP community. It's like everyone is quietly preparing for a squeeze, where suddenly there is not enough XRP available on exchanges to meet the new demand. The price has only one way to go. Now, whether that moment happens in a month, a year, or 2 years from now, nobody can say for sure. But personally, I want to be prepared for whenever it hits. So, what's my strategy with all of this info? Well, for one, I'm not betting my life savings on some specific date or price target. I've been in this space long enough to know that even if you're 99% sure about the direction, the timing can surprise you. Right? Patience is going to be key. Now, I'm holding a core XRP position that I'm comfortable with through ups and downs, but I'm also doing some practical things on the side to make sure that I'm ready for the next bullish phase. One really big tip that I cannot stress enough is to have multiple exchange accounts set up and verified. Seriously, right? If you've only got one, or maybe you've only ever used one crypto exchange, you need to consider this your friendly nudge. Right? When markets get crazy, and trust me, if a true supply shock hits XRP, the FOMO will be unreal. Right? So exchanges, they can get overloaded or even temporarily go down. Right? We've seen platforms lock up or suspend signups during peak mania. Now, the last place that you're going to want to be in a frenzy is stuck in a KYC queue or unable to move your funds because, well, the exchange is jammed. That is why I have Plan A, Plan B, and Plan C with these exchanges. I've signed up, I've completed KYC, I've even tested out a whole bunch of them. Right now, if Exchange A has issues, I can quickly hop over to Exchange B or C or D or maybe even Z if I have that many exchanges. Now, if one has no liquidity or halts withdrawals, you can have your alternatives ready. It's like having spare tires, but hope you never need them, of course, but you'll be glad that you do should you have that time, should that time actually arise. Now, in case you're not sure where to start, I've actually got you covered here. I have put together a list of the exchanges that I personally use and trust on my website. There's a link for that in the description down below. Now, those are affiliate links on my website, which means that if you do choose to use them, sign up and trade through those accounts and those exchanges using those links, it does support the channel here and costs you nothing extra. And you know what? I do greatly appreciate that. I want to take a moment here just to say a big thank you for anyone who goes into the description, goes over to our website and uses any of those links to the exchanges because it genuinely supports the channel here. And of course, it costs you nothing extra. Transparency for the win. Anyway, you often get bonuses as well for signing up through some of those links. So it is a bit of a win-win situation. I mean, for example, right, I've partnered up with Kraken for a special promo just for you guys. Now, Kraken is one of the oldest and most reputable crypto exchanges that are out there, and they've agreed to hook you up, or this community up, with a $25 bonus in XRP if you sign up using the link that's in the description down below and trade at least $100 worth of any cryptocurrency, excluding stablecoins. Now, it is a limited time offer. Basically, you invest $100, which you might have done anyway, and you get $25 worth of XRP for free as a bit of a thank you. Now, it's not a bad deal to instantly boost your XRP stack, at least in my opinion. Just be aware though, because this is an affiliate link promotion, that using it does benefit the channel here and costs you nothing extra. The full details and terms and conditions for the Kraken deal are linked in the description down below as well, which means you do have to pay attention to all of the fine print because not every jurisdiction around the world is eligible. Now, it's worth noting that this promotion is brought to you by Kraken, is not affiliated with YouTube or Cheeky Crypto in any other way. So if you've been meaning to open up another exchange account as a backup plan, this actually is a pretty great way and a great incentive to just get on board with Kraken. Now, by the way, we chat about strategies like this all the time in our free educational Discord, which is linked in the description below as well. So if you're not already in there, you should probably think about hopping in. It's a friendly community where we share insights, answer questions, and we help each other navigate this crypto space. And of course, education is the focus. There's no pump and dump nonsense there. So just learning and growing together. I'd love to see you there. So, we can talk about all of this stuff in real time. Okay, now let's shift gears for just a moment. While we wait for the big XRP boom, fingers crossed of course, well, I've also been exploring some new projects to grow my crypto on the side. Now, one of them that I'm pretty excited about is called Unity Nodes. Some of you longtime viewers will actually recall me that I've mentioned Unity in previous videos. It's a project that has been founded by the teams behind World Mobile, yes, that's the Cardano Associated Telecoms project, in partnership with a new project called Minutes Network, sister company if you will. Now, the promise here is really quite cool and practical at the same time. It's all about using everyday devices like smartphones and tablets to support a decentralized mobile network, and you earn cryptocurrencies in return. So think of it like turning an old smartphone into a mini crypto miner, but instead of mining, you're actually providing mobile network data about whether there's call quality is poor, whether there's a down area like poor signal, things like this. Very valuable data to the mobile networks. And all of the issues get recorded to the World Mobile blockchain. Now, I love the concept here because it's like putting spare technology to work in a really meaningful way. Now, here is what I did. I actually purchased a Unity Masternode NFT, which grants me the license to connect up to 200 different devices to their network as nodes in the network, right? Now, I'm not crazy enough to go ahead and set up 200 phones right off of the bat in my living room. That would be pretty crazy, right? Now, I'm starting with a small test here, 10 phones to see how it all runs and what the earnings look like. If it is successful and the process isn't too much of a headache, then I'm going to consider scaling this up gradually. What's the incentive? Well, that's passive income in crypto. Because Unity doesn't create some new token that no one's ever heard of and pays you in that. No, they're actually allowing you to earn in different cryptocurrencies, right? Things like Bitcoin, Ethereum, ADA, XRP. Most recently, they've actually partnered up with Polkadot to add Polkadot as a payout option and Shiba Inu for SHIB tokens too. Now, you can bet that I'm choosing to have my payouts in XRP, of course. You see, to me, this is a clever way to effectively staking or accumulating even more crypto over time without actually buying it outright. Now, I'm contributing a service, right? Network coverage here. And of course, I'm getting paid in cryptocurrencies that I believe in. It's still very early days for Unity, of course, and it's definitely not a get-rich-quick scheme, nor am I throwing all of my money into it, right? But as a tech and a crypto enthusiast, I do find it quite rewarding, both intellectually and hopefully financially too. Now, this is, of course, an experiment, and I do like to experiment with these kind of projects. But something I should stress to you guys is that you must do your own research on Unity nodes if it does pique your own interest. I'm going to put some links in the description down below to their light paper, the rewards calculator, so that you can check all the details for yourself and run the potential numbers. You see, the concept has been floating around in our community for a while, and it shouldn't be totally new to if you've kind of watched a few of the recent videos. But now, you know, right? I'm actually putting it to test with my own resources, and I'm going to update you all on how it goes in future videos. Maybe one day I'll be that guy for having, or at least that guy known for having a wall of phones mining crypto in his garage for science, of course. Jokes aside though, Unity is just one more way that I'm actually trying to diversify my crypto strategy. And in this case, I'm earning more XRP and other coins passively on the side. It's a small piece of the puzzle, but every little bit counts. Okay, let's zoom back to the big picture here. What does all of this mean for us regular XRP holders? Well, to me, the takeaway is that something big is brewing quietly. The key word is quietly here. It's happening in the boardrooms, in OTC desks, in custodial cold wallets, away from the public, noisy exchanges where we watch the price. Now, if Chad's model even comes halfway true here, then we are looking at a scenario where a handful of institutions end up holding most of the available XRP. And that kind of supply concentration is not a theory. It's actually in progress as we discussed. And traditionally, when the asset's available supply gets scarce and demand kicks up, well, price moves up fast. I mean, we have seen similar dynamics with Bitcoin. I mean, think about Bitcoin's Grayscale Trust soaking up BTC in 2020. Or the halving supply cuts that reduced the new minted supply of BTC in half. Now, XRP's case is a little bit unique because of the past concerns about its larger supply. Funny enough, though, those concerns, they might get flipped on their head, right? Because the narrative could soon shift from XRP has a huge supply, it'll never hit a high price, to wow, there actually is not enough XRP to go around at the current prices. But I'm going to stress again, timing is unpredictable. We might see XRP's price remain kind of range bound or even dip in the short term, especially if macroeconomic stuff or Bitcoin's movements weigh on the whole crypto market. Now, I'm mentally prepared for that. In fact, price is almost good while I'm accumulating and setting up my plans, like exchanges, the Unity nodes, etc. It means that I can do it all without FOMOing into a spike. However, when the turn comes, right, whether it's triggered by a major bank adopting XRP, a wave of ETF inflows, or even retail mania sparked by some kind of viral news, it could be swift. Now, supply shock setups are like a rubber band pulled back, right? You don't know exactly when it's going to snap, but you can feel the tension building. Now, I often ask myself here, will I be ready when that snap happens? For me, being ready means having all of my XRP safely stored away, on a ledger, stacks in my case, or, stacked somewhere more applicable, right? Having exchange accounts open and ready for liquidity if I need to trade, and having a network of information like our Discord and our other channels to stay on top of all of the recent developments, and having some side strategies, things like Unity, staking, generating extra coins for me. It also means being emotionally ready, right? Not just expecting overnight riches, not panicking at the first sign of some volatility, and definitely not falling for some wild rumors like those age-old $589 overnight predictions, of course, without any evidence, right? By the way, if XRP ever does hit $589, you have my full permission to spam my comments with "𝗗𝗶𝘀𝗰𝗱, you were wrong." Memes, of course. Now, I will laugh all the way to the bank. That unlikely scenario happens, of course, but let's stay grounded here. You see, the bottom line is that I see XRP's future as incredibly promising, but I'm approaching it with a mix of excitement and caution. The groundwork for a massive XRP supply crunch is being laid right now. XRP is providing new instruments to on-ramp, institutions are accumulating, major companies are integrating XRP into their systems, and the overall crypto market infrastructure is maturing around this particular asset. I mean, it's bullish. It's very bullish in my opinion, but in a way that requires patience and it's at least fully play on out, right? So I'm doing what I've always kind of been an advocate for. I'm staying informed, I'm sticking to my plan, and I'm not letting the short-term noise shake me out. So if the price spikes tomorrow, great, I'm positioned for it. And if it takes 2 more years, that's also fine too. I'm going to use that time to accumulate more and perhaps even earn more through things like Unity or finding some kind of XRP staking yield. One day, we might just look back at these times and say, man, remember when XRP was under $5 and we actually buy it and could actually buy it on exchanges, right? Because if some of these projections are indeed right, then a lot of that supply might be locked up and hodled by giants, leaving the rest of us just scrambling for crumbs at much, much higher prices. Now, I don't plan to be one of those guys scrambling around. I want to have my bag well before that actually happens. But what about you? Do you think this ETF-driven accumulation is as big as a deal as it sounds? Are you on the verge of an XRP supply shock, or will something else entirely happen? Regulations, perhaps? Throw a complete wrench in the work, right? Now, I'd love to hear what your thoughts are on all of this, so do drop a comment down below or jump in the Discord for a chat. Right? And hey, if you found this story as fascinating as I did, maybe share it with a friend or two who's into crypto. It's a heck of a conversation starter. Anyway, thanks for sticking with me on this personal crypto journey today. If you've enjoyed the deep dive and you want to join me on the next one, then you know the drill. Hit that like button and that subscribe button, and make sure to hit that notification bell as well. That way you won't miss any new updates as this wild crypto saga continues. Anyway, I appreciate you watching, and I will catch you all in the next one.